Welcome to the Mortgage Note Podcast. I'm Scott Kimbler. Recently, we spoke with Chris Mayer, the CEO of Longbridge Financial.
We are actually a home equity company focused on helping older Americans use home equity responsibly in retirement. I say that because we just announced the launch of a new product called HELOC for Seniors, which allows older Americans to use a HELOC. It's not a reverse mortgage, and it's a product that we're partnering with Figure Technologies, who's providing the technology solution for that. So HELOC for Seniors is a new product, and I do want to get back to Platinum Peak and Platinum Preserve, but it's a new HELOC product that allows older borrowers to make interest-only payments as long as they live in their home and make other required payments. So there's never any amortization on the loan, so you don't have to pay it back over time. You don't have payment shocks 10 years where you have to start fully amortizing the loan the way you would with a bank HELOC. It's a fixed rate, not an adjustable rate product. And unlike a closed-end second or some other kinds of HELOCs, it allows the borrower to redraw and not fully draw the whole thing up front. You can draw up to 80% up front, so you can have an available line of credit. And if you pay back the loan, you can redraw as well for the loan over a 10-year period.
So it becomes like a source of an additional flow of funds.
Yes, it's liquidity for people, but it's, think of it as kind of a HELOC product that's designed to meet the unique needs of older Americans, which, most HELOCs are actually, I think, probably ill-served for older borrowers. It either, existing HELOCs in the market eventually require you to pay the loan back. So you're 65, you take out a HELOC, over the next 5, 10, 15, 20, 25 years, you have to pay the loan back, which means you're effectively saving money in retirement. You have to go pay back something. And this, you can just pay interest, and the balance of the loan is paid back only when you move out of the home, as long as the borrower pays their property tax and insurance, so as long and makes the payments on the loan, so you never have to pay back the principal while you're living in the home.
I gotcha. Now you just launched the Platinum, the Preserve, and that. Can you explain what that is and how that differs from what people may traditionally think of a reverse mortgage or equity income type situation being?
Sure. So actually, for all mortgages, both reverse mortgages and traditional mortgages, the typical mortgage, you're going to borrow against the entirety of your home. So if home values go down, or in the case of a reverse mortgage is a loan that you don't make principal and interest payments on. So a reverse mortgage, you borrow money and the balance is going to grow over time. And if you live long enough, one of the mistakes people make about reverse mortgages is they think that, the bank or the lender owns the home, which we don't. We hope never to own the home. But if you live long enough, eventually the balance of the loan will eventually grow larger than the value of the home, because reverse mortgages will have interest rates anywhere from, say, 7.25% to 9% or 9.25%. And if home prices go up at 3 or 4 or 5%, or they go down, eventually the balance of the loan, if you live long enough, you live to 100, eventually the balance of the loan will exceed the home value, in which case, the borrower will have gotten the use of the proceeds. That's a good deal. But eventually the home, the proceeds of the home will go to the lender. What happens with Platinum Preserve is it's the first product in market that allows you to take a portion of the home and say, look, I'm going to borrow, I care about giving money to my kids, or I want to put money aside that if I have to sell my home, I may use it for assisted living. I may use it for healthcare expenses or other things. I want to give it to charity or to somebody else important in my life that, if I don't have kids. So you can take a portion of your home, say 30% of your home, and say, you know what? I'm going to reserve 30% of my home that I'm going to give to my kids. No matter what happens with the reverse mortgage, as long as I pay my property tax and insurance, and as long as I, cooperate with the lender, upon sale of the home, I'm going to get 30% of the value of the sale price of that home to give to my kids, to give, to have available to me if I sell the home and move into assisted living, whatever it is I want to do with that portion of the home, that's going to be mine or my heirs to decide what we want. And that is something that hasn't really been available before in this market, that you can preserve some of your home value to give for another use. And so we're very excited to launch Platinum Preserve because we recognize, surveys from, Fannie Mae and other sources suggest the, half to 2/3 of people who respond say what they really want to use with their home equity is actually to help the next generation. And this product allows them to do that.
So this allows you to benefit from the equity of your home, but not really drain yourself doing it and not drain what you would pass on.
Yes, so you can decide I want to give I can use some portion of the home equity for my own use, and I can reserve some or preserve some portion of the home equity to give to the next generation. Um, and if you look at older Americans, the majority of older Americans, the value of their home, the home equity is actually as much or more than what they saved for retirement. The home is their largest asset.
Sure.
And if you want to preserve some portion of that asset for retirement, or sorry, for the next generation, this is really the first product out there that allows people to do that while still using a portion of that asset to live in. So you don't have to sell the home in order to make sure you're going to have something for the kids, but you can still use some portion of the home equity to help in your retirement.
Now, how did you and the other folks at Longbridge come to realize that this was not only a useful product, but one that you could successfully pull off? Because it kind of sounds like you're drawing outside of the traditional lines.
Yes. In our company, one of the things when I talk about what we do, we are, I can tell you one sentence, we're about the responsible use of home equity for older Americans in retirement. And every one of those words matters to us. Um, and so when we think about the responsible use, we think about creating products that allow people to sustain home ownership. And we think about giving people options. And we understand that one of the barriers, this comes from talking to clients. My background is as a professor. I have a PhD in economics from MIT. I've, taught for decades at, a number of, Ivy League universities. And so I understand a lot of the research around what people want to do in retirement. And when you look at all of that, it really suggests that, not surprisingly, people care a lot about giving something to their kids. Um, I'll give you one other example. My mother-in-law, um, who passed away a few years ago, she, her daughters are both college graduates and have done very well. She, you know, didn't go to college. She had her first daughter in high school, and she worked her life trying to help, to try and raise her kids, and with to try and you know and she did raise them well. When she passed away, she didn't have a lot of money relative to her daughters, how successful they were, but what mattered to her was giving something to her kids. She wanted to give something because it was a tangible sign of what she cared about, and for her that was incredibly important. And this kind of product allows people to do that. whatever their financial circumstances are. It allows them to say, you know what, I want to give something to my kids. I want them to know that I care. But, I also can use some of the money for me to live today because I need to pay off a mortgage. I have expenses. I want to help my grandkids, pay for college. Any of the things that you want to do in retirement, it allows them to do that while still preserving a portion of the assets for the next generation or, for whatever they want to do.
I see. Yeah, that seems like a good idea. And having had, older people in my family that have, passed on, I certainly see the importance in that. And like you said, she wanted to feel as though she had left something, even though the children were a bit more financially better off than she was. That sounds like that sounds like something that, yeah, just wouldn't have been available under what people think of as their traditional model for reverse mortgage or using your equity as income. Kind of seems almost like a maverick idea, so to speak.
We try and, you got to think out of the box. Look, we're in an industry where people bring a lot of ideas, a lot of preconceived ideas about reverse mortgages to the table. Some of them are right. Some of them are things that people hear, think they know, that may not be accurate. And the thing about this product is it helps you better understand at the end of the day that this is just a mortgage. You're not selling the ownership of the home. You're not giving up the ownership of the home. The vast majority of people who take out reverse mortgages today have money left over to give to their kids. But this makes that really clear, and it provides another level of protection and assurances that you wouldn't otherwise have. And that's really what we're trying to do, is to help people, as you said, Scott, better understand what the product is or isn't, but provide some assurances and help them understand that we as a lender are listening. Like, we want to understand what they want to accomplish. And if you're in business, if you're not listening to your customers, you're not doing a very good job in business. And as a reverse mortgage lender, our job is to listen to what our customers want and to try and provide that. And that's what we've done with this product.
Now, folks that are reaching retirement age or even a little bit beyond retirement age and that are considering this sort of setup looking forward for their finances, is Platinum Preserve somewhere you can start? What are the steps to actually get a person that is nowhere with you right now to being at this point with you?
You are eligible for Platinum Preserve, depending on the state, for ages as young as 55, and in some states up to age 62. So that's the minimum age for the product. We're at the moment offering this for home values of 450,000 and above. Those restrictions may change over time. Otherwise, you can, come to the Longbridge Financial website. We also work with mortgage brokers and other lenders. So you may find the product, if there's a mortgage lender that you worked with to get your mortgage today, you may reach out to them and say, look, I heard about this from Scott. And I heard, and, they may then say, this is something I'm interested in. If they don't have the product available, you might suggest that they look into it, but you can always reach out to Longbridge Financial on the website, and we're happy to work with, people. The website explains kind of what the product is, but it really is a product designed for people in retirement, and to help them kind of achieve what their goals are in retirement.
What is the Platinum Peak program, and how does that differ from Platinum Preserve, or are they joined at the hip?
They're not joined at the hip. They're two different products. Platinum Preserve for people who are, want to, to use a portion but not all of the home equity. We also see many people who are facing more challenging retirements where they have a large mortgage to pay off, or they have a lot of debt, or they have a, strong financial need. Maybe they need to, to renovate their home, for retirement. Somebody's in a wheelchair, or, has challenges, walking and needs to retrofit the home. Platinum Peak is designed for people who want to get the most possible proceeds from a reverse mortgage. And it allows borrowers to get up to 20 to 25% more proceeds than you would even get from an FHA-backed HECM. In fact, it's the highest proceeds available of any product in market today that we're aware of. And so that product is really designed for people who want and need to access the most money they can out of their home. And this product is really about serving that demographic. We do run into lots of people who, for whatever reason, have refinanced money out of their home. They have a strong financial need, and we're trying to help them accomplish what they need, which in most cases for Platinum Peak is somebody who's going to pay off a mortgage, because the mortgage payments in retirement create a real burden on their retirement. They're stopped working, and it's a challenge for them to make it through retirement. And that's what Platinum Peak is really about. We also have a line of credit product, which allows people to have a flexible line of credit that they can access a portion, take money over time. And HECM product, which is the FHA insured product, that allows people to also have a growing line of credit over time. So different products for different people. And then our latest, HELOC for seniors. So it's really listening to our customers, trying to figure out what they're trying to do. There's $14 trillion of equity with a T for people who are, owned by people 62 and older. And there are about 12,000 people a day turning age 65. So it's of whom about 75% own a home. So it's a huge demographic, and it's an important market, but it's one that reverse mortgage lenders have been struggling to fully understand. And people have been, bring a lot of ideas to the table about what a reverse mortgage is or isn't. And for our company, we're really trying to figure out how can we help them better understand the product, create products that work for them. And, our goal at the end of the day is to help people sustain retirement. So our company has onshore team in Houston. We service all our loans. So when you get a loan from Longbridge, we will not sell that loan to somebody else. We will service it and manage it. And we have a team of people in Houston, not overseas, who will work with people if they're having challenges, to try and resolve problems as well. So we have a problem-solving team to help people, or their heirs, to try and resolve issues if they have them with the mortgage.
I got you. And if I have a mortgage with any given lender, I can work with them to reach you to make other further plans, correct?
So we have about 1,000 brokers and lenders who work with us, including, some of the, largest lenders, in the business, who work with us for reverse mortgages. But they can reach out to their local lender. If the local lender says they don't work with Longbridge, they can reach out directly. If the local lender says, well, I'd be happy to, they can, that lender can reach out, and we have a team of people who would work with them to get approved to be able to offer a product to a customer, a Longbridge product to their customer.
This is something that people in yours and mine age group should really get a move on, in at least thinking about as an equation in the overall mosaic of retirement.
I think about this as, suppose you walked into a financial planner and said, I'm thinking about how I'm managing my money in retirement, and I have my money invested in a bunch of things. And the financial planner says, oh, by the way, I'm going to ignore your largest asset, but let's talk about everything else. And I know you have a mortgage, but I'm going to ignore that too. You wouldn't want, financial planner wouldn't really be doing service to clients by saying, I'm just going to ignore the largest asset you have and let's deal with everything else. So, and, half of people who have, who are hitting retirement age 65 to 69, have a mortgage, and 40 and 50% of them. So, you really should be thinking about the home and the mortgage and your largest asset in retirement. You may decide that a reverse mortgage works. You may decide that HELOC or something else works. But whatever it is, ignoring that asset entirely probably doesn't make much financial sense. And that's the largest expense. So if you look at data from Harvard, 7 million people who are homeowners, not renters, homeowners, spend more than 30% of their income on their home in retirement. And half of those, 3.5 million people, spend more than 50% of their income on their home, 50% in retirement. And so thinking about what it is you're spending, thinking about how to use that equity responsibly, seems like an important part of the discussion in retirement. And as I said, you may come to the conclusion that you want to look at a reverse mortgage, you want to look at our HELOC for Seniors product or something else, but you should at least think about what's going on with that money and the obligations you have and how to best manage them. Because over time, the mortgage payments become an increasing burden because people's incomes in retirement go down, not up. And the expenses associated with the home, property taxes, insurance are rising, not falling. And that creates challenges. And, there's a lot of things people don't understand about the product that, that help people provide, assurances and security. And I'll give you one other example. We've had people whose homes burned in the LA fire or who flooded in Florida from hurricanes.
Sure.
Pretty bad outcome for them. A HECM, which is a reverse mortgage guaranteed by the FHA, allows borrowers, even if their home is burned down or flooded by a hurricane, to draw on a line of credit to help them. If they have an available line of credit, it allows them to draw on the line of credit as long as they intend to move back in the home and rebuild. And we've had people that have, been forced out of their home who have been able to draw on it for liquidity in a way that you just couldn't get from a bank HELOC. You don't have to fight with your lender. You do have to plan on rebuilding, but you don't have to do that the next day. But it provides liquidity for people and, financial security. And it's a unique kind of a product. And people don't fully understand the product and what it does. But I'll tell you, if you look at our Trustpilot ratings, they anywhere from a 4.7 to 4.9 on a 5 scale. People who get reverse mortgages, for many of them, it's one of the best, things they've done in retirement. And they tell us that because it just relieves a large burden and it allows them to use home equity to have a better retirement. It's not that people are on the street without one. It's that they can have a better retirement and a more secure retirement through accessing home equity responsibly. And that's the kind of thing that we try and do as a lender. Those are the things we're trying to help people, think about.
You can learn more about these products and more at longbridge-financial.com. I'm Scott Kimbler with the Mortgage Note Podcast.